Let me. Can you see my chat now?
Yes, sir.
Okay, someone is telling my setting. Okay, what am I saying? Okay, I've actually admitted you, Mr. Joe. Okay, another person. Let me try and admit. Okay, so that's that about. I believe everybody understood. Everybody here understood the meaning of support, demand, resistance, supply now.
Yes, sir.
Okay, you will get to know more of it when you start with that pure water factory, like I'm saying. So let me explain time frame. Some people are like, ah, sir, if I'm trading this thing, which time frame should I use? Which time frame should I use? This time frame, the matter of a thing is not actually hard. It's actually psychological too as well. Hello?
We are with you.
Yeah, yeah.
It depends on what I'm trading that I'm going to use the time frame I'm using. For instance, if I'm a crypto trader and I'm trading Bitcoin, I might just switch to be a monthly trader or a daily trader. That is to say, Bitcoin, the price of Bitcoin might change in any seconds. In any second, the price of Bitcoin might change. You understand? It might fall, it might go up. You understand? So definitely, those kind of things. If I'm trading it, I will going to switch to a lower time frame. Lower time frame like 1 hour, 4 hours, 2 hours, 4 day. I said 4 days, 4 hours, 8 hours, then 1 day. Those will be my time frame. But if I'm a trader that is trading pure water, you cannot expect me to be using 1 hour time frame for my chart, because pure water has been 5 naira from 2020, as I know new from 2006. Pure water was 5 naira till 2016, if I'm correct. Hello?
Yeah, yeah, yeah.
So just imagine, if I'm using if I'm not if I now want to trade pure water, I'm now making use of a monthly time frame. That's actually bad, because I'm very sure that I will have how many months do we have in a year? We have 12 months in a year, and 2006 to 2016, that's 10 years. That would be like 12 times 10, that would be like 120 months. So that means I will have like 120 candlesticks that will not be like sell. So it's not actually making sense. But if I'm actually making use of a yearly time frame, do you understand? It might just be a 6 candlestick that will just show the whole representation of the market for me. And the 1 year time frame sef is actually even too big. Is actually even too, is it small or big sef? I might just switch to, let me say, 4 year time frame. You understand what I'm trying to say? Hello?
Yes, sir.
Hope you get what I'm trying to say.
Yes, sir. Yes, sir.
Yes, sir.
In short, what I'm trying to say is that it depends on what I'm trading, that will let me know the kind of time frame I want to use. Okay, it will depend on what I'm trading. Please write it down. Please write it down. It will depend on what I'm trading, one, and the type of trader I want to be. Because we have three type of trader. I think, let me just be going low like this. Mo ṣe ń go fast fast kí n tó fẹ́ máa rẹ̀ mí gan. We have three type of traders. We have the traders. That is the traders that within 1 hour, 2 hours, 5 minutes, they are out of the market. You understand? We have the long term traders. We have the short term traders, short term. We have the intraday. We have the short term traders. These short term traders are just traders that can take a trade for a day or 2 days, one and a half
I
day.
did not see too much. I can't really hear you.
I said, in if you want to make it, if you're actually finding the type of time frame you want to use, it will depend on two things. Are you listening?
Yes, sir.
I said it will depend on what I'm trading, the type of market I'm trading. One. The second one, the type of trader I am. And I said we have three type of traders. We have the intraday traders, the short term traders, and the long term traders. Do you understand? And I went forward explaining that the intraday traders are those traders that they can't spend more than 5 minutes, 10 minutes, 1 hour in the market. Anything beyond that, they are off the market. And bankers, the institutional traders, falls in this category. Do you understand? So for those that are short term traders, these are traders that anything beyond 1 day, 2 days, they are out of the market. While the long term traders are those that can keep trades for months, weeks. Do you understand? So a trader like me, if I'm a inter-trade trader, you can't expect me to be using 1 minute time frame to analyze markets, because the representation the graphical representation, or let me say the chart representation of what I'll be getting in the market, we won't actually be encouraging. For instance now, okay, I'm trading, what we having right on this chart is what? Is volatility 25 synthetic indices. I will know that synthetic indices are very volatile, so normally it's actually advisable for us to switch to a lower time frame for us to understand what's happening in synthetic markets now. But this is a daily time frame. So as a day trader, you understand, that is, as a day trader, I'm actually making myself, let me say, a I'm actually making myself maybe a long term trader or a little short term trader. You understand? That's why I'm actually making it of a daily time frame. But if I'm actually a intraday trader, let me switch to 2 hours. I said 2 hours, 1 hour, we're out of the market. So let's see what the market is going to do. Connected now. Why is not taking so? Okay. Can we see? Can you see what the market is showing us now after switching to a lower time frame? Hello? Okay. Can you see actually from what we have from daily time frame? What, as a day trader, looking at that daily time frame, there are actually better understandings there than me coming to this 2 hours time frame. You understand? But as an for instance, but if you are a short time trader, intraday trader, you must actually find your entry here, because these are another entry. Normally, if I'm not in this class, I should give this signal, but I will tell you now. You see this class, do you know the major rule? Okay, having understood support and resistance, do you know there is a rule guiding support and resistance? Do we know the rule, or should I say it?
You can say it.
The rule is that once the please all this thing, please be noting it down, because when we come to the pure water factory, you will so much love this thing very well when I'm explaining it in the pure water, how the price rose in pure water. Do you know, I said the rule is that once there is a breakout in your support or your demand, we can actually call our support zone our demand, right? Our demand zone. Once there is a breakout in either your support or your resistance, there must be a retest in the market. For instance, maybe the particular price was 10 naira before, there was now rise in the price, the products you are buying from that 10 naira now rose to 20 naira. Before anything can happen in that market, that 20 naira must come down to that 10 naira back before it can either go beyond that 20 naira again, maybe to 25 naira, or it can now come inside the range again, maybe back to 5 naira. You understand what I'm trying to say? So the law says once there is a breakout in either your support and resistance, there must be a retest in the market. That is, if the price broke down from 5 to 2 naira, the price must surely go back to 5 naira back before it starts coming up or before it starts coming down. That's the rule. You understand? When we get to the pure water, just jot the rule down. Just be jotting all these things I'm saying, you be jotting down, be jotting them down. You understand this when we come to the pure water explanation, pure water factory explanation.
So,
Eh?
is the retest also called a retracement?
It's also called, we can also call it retracement move or corrective move.
Okay.
You understand?
Okay.
So can you see this chart now, this flat 25 charts now? A lot of buyers, a lot of traders would have actually gone for what? Actually gone for the sell. They would have want to join the sell that is selling now. But to me now, the market is about to watch, is about to buy. Can you see my mouse?